Good morning, everybody. This is TJ with the PTU Trend Jumper and Netpicks.com. Thought we'd do something different today and explore this Renko chart a little bit more. I introduced it last week. We'll keep an eye on our basic trade plan as well, the 377 tick chart. I went ahead and set this Renko chart up so that every bar has a 2 or a 7 on its highs and lows, just to stay consistent. This is what I'm trying to do whenever I use this chart. With Renko, every day it's going to open up different because it's a 5-tick bar. Okay, we have a long triggering in at 104.47. The pit just opened. To give it a chance to settle down here. Place that order. And actually now it's going the other way, so that's good. I avoided that. 104.17. 103.82 would be the target. And the stop will be at 37. But you can see it's there already. Alright, so let's see how this works out. Definitely paused a little bit right at the open of the pit, the oil pit, because I knew that that's a time where there's going to be some fast volatility, and I wanted to wait and see. And that was good because you can see it touched the entry and touched the stop, and you never want to try to trade through news. So okay, this one pushing lower. Let's see now if we're going to make a new swing low here. Now, the risk reward on this is really nice, as you can see. You can visualize it on the matrix. You can see what the risk is. You can see the reward on the first position way down here. And it's always that risk reward on these trades because of the way the setups are designed. The risk, by the time you enter the trade, is going to be 4 bars. 1, 2, 3, 4. You see the stop right there on the border of the bar. I've got these set to 5 ticks. And the initial target that we exit at is actually 7 bars. So the risk reward ratio is 7 to 4. That's pretty good. By the time it gets here to 103.97, we'll take the risk completely off the trade and have a risk-free trade. Let's see if we're going to get that low. Our 377 tick chart also triggered in, and that would be the official short with the trade plan that we're typically following. I'll show you that one really quick. You can see it triggered in right here, and the target is right here. And in fact, it's already at a risk-free position, and it's pushing down on its target. So we'll see if that one becomes a full winner. We're focusing on the Renko chart today. Crude struggling with the 104 level, and that's to be expected. Those big round numbers always put up a roadblock that has to be worked out. You could see on the 377 that last trade couldn't get through 104, came up, money management took it out with a 1-tick gain. Now it's second attempt, a jump trade. And so if this can just push through and get to its target, then the daily goals will be reached with this plan. Let's see what happens. Clearly it has to bust through the 104 level and get as low as 103.89 now. We've got to get to 103.97 before we see our stop move down on this Renko bar trade. And you can see 104, the low of the day, so it's a big key level. It's also the low of the day. Feels like it wants to push through. There it goes, pushing through. And look at the stop moving down. So we're going to put our stop, we're going to put it on this bar right there. 104.07. And our 377 tick chart missed its target by 1 tick. You see here it is now. It's fighting through the 90-cent level. So it took all these bars to get through the 104. Came down 10 cents more, bounced off. Every zero, every 90 cent, 80 cent, every multiple of 10 is a key level. And even multiples of 5. the multiple of 10 a little bit more formidable, but it'll push through, hopefully. Another risk-free trade on crude, but we want to get a full target on the 377. So we'll see how that works out. You can see these blue lines are representing the trade on the Renko chart. So we just got to get one tick beyond that 90 cent for that trade plan to be a full winner. On our Renko trade, we've got 10 ticks locked in, so that's a profitable trade no matter what. But we want to hang in here for a bigger move in case oil continues to sell off. You can see with our EMAs how it's accelerating down and the 200 is curving lower. Hopefully we'll get another leg down here. We are a bit extended away from the 50, and we know that the price will ultimately want to get back to it. Hopefully we'll at least get out of our first position at this target prior to that. There's full target on the 377 tick, and there's full target on the Renko chart. And we're going to move our stop down to this bar, 104.02. So we're not going to necessarily follow the dots, because the dots now on the trailer are not tuned to Renko. So instead, we're going to stay above the jump line and then work around the border of the bar. Can I go up to 07? I could, but we've made a nice amount of profit here, and I think working around the key level, staying on the border of the bar at 02 is a good place to put that stop. So we'll just go with that and see if we can stay in for a bigger move. But a profitable trade. The first position hit the full target right here, and 7 bars times 5 ticks a bar, that's 35 cents. And on crude oil, that's 350 bucks. And we have a risk-free position that's profitable that could go a lot further, as you can see. Now, I didn't talk a lot about the strategy. I just kind of opened it up and started trading this morning. But this is the trend jumper, the PTU trend jumper. And I modified the calculator settings to accommodate a Renko bar. Renko is a Japanese term for brick. You can see these look like bricks. We're going to use a horizontal line to kind of show us where to put the stop. Okay, it's based on the last bar that closes below the jump line. And you can see that we're going to go down to 87. So look at how much profit I'm locking in now on the matrix. Now we got 30 cents locked in on that second position with the chance to even go lower. Again, I can't follow these dots because the dots are not on the border of the bar. And sometimes you could get price action that, like, see what's happening here? If this closes lower, we're never going to know when we look back on this chart that this price level is being reached at this time. The only time we know is after the bar closes. And so when you back test using Renko, you have to use the borders of the bar for exits and entries, targets, stops, everything. And you want to ignore all the price action that happens intra-bar. Okay, all we're interested in are bar closes and the borders of the bar, because those are the prices that we know happened. Okay, we can go back in a back test and we can verify that those were prices that actually occurred. We cannot see all the noise taking place in between each bar closing. Now look, this may close lower, and it did, so we don't even know that the price was up here a moment ago, you see? And that's why when we trade Renko, we ignore that as well, and we stay with the border of the bar. So now that we've come lower, let's go to the, we want to at least be 2 ticks above the jump line. So this one is not. So we're going to go to the next bar border right there. Okay, and the jump line is at 80. This puts it at 82, and that's what we want. Now you could trail 7 ticks above the jump line, but I think 2 is adequate. 2 is usually what we follow with the 377 tick chart. which incidentally, that one's still trailing as well. Let's just take a look, because that trade, if we were trading that this morning, we would have hit our goals. The first trade here, false start, right? It stopped out with a 1-tick gain. The second trade hit its full target. So that gives us 2 winners, a full winner on the second trade, a partial winner, even though it was only 1 tick, but that counts on the first trade. And notice how this is trailing down. You see? It's trailing the same technique that we are with the Renko, but we'll follow the dots on this one. Okay? Now I have to go back to the Renko and move my stop since I've been talking. But you can see the 2 different techniques. The 377 tick chart has been a chart we've been using for nearly a year now with crude oil, and it just made new record profit levels again this morning on this last trade. But look at Renko. Renko, a totally different look and feel, and maybe it's going to be something that a lot of you like using even more than the 377 tick chart. And now we're going to go down to the next bar border, because look, it's above the jump line based on the last bar to close below it, and we're on the border of the bar, so we're going to move that down to 77. Now I know a lot of you might be tempted to push it even further, because we're up over 20 cents of risk, $200 of risk still on this trade. And you might make a good point there, but if it spikes down really fast, I might get aggressive and take the gift from the trader gods. Because what you could do instead of following the jump line is you could just trail X amount of bars, right? Right now we're 1, 2, 3, 4 bars up. You may decide to trail 3 bars or 2 bars, but you're going to get stopped out faster and you could miss a bigger move. So the jump line is an excellent tool for trailing, because it shows you the line in the sand where the tug of war takes place. It shows you, where that pivot point is between buyers and sellers. So as long as we stay below it, we ever stop a little bit above it, we're in a good position to capture a bigger move if one should occur. All right, let's see. Are we going to move this up? The jump line is at 69. If I go another bar down, oh yeah, we're going to 72. So as long as we're at least 2 ticks above the last closed reading of the jump line, and then we just go up to the next border of the Renko bar, that strikes me as a good way to trail using the jump line. And we're still 4 bars above the lowest low. See, now if we were to move it down to 3 bars, we would have already stopped out. So we may stop out here, but we still have a chance to pick up a larger move. I expect, though, the price is going to want to start coming back to the 50 EMA. But look, we've survived so far. Now that we're on that jump line, that may actually mark a new resistance level and set up a new leg lower. So let's see if that happens. The 377 tick chart, that one did finish. That one did stop out at 61. And that trade picked up 66 cents. And the 2 ticks on the first trade, so it was a 60, actually that trade picked up 64 cents. So it was a 66 cent session this morning on crude oil with the 377 for $660. Now the Renko bar, this trade actually did better, because we already made 35 cents on the first target, and if this one stops out at 45 cents here, then we will have done even better on this trade than the 377 tick chart. And we're going to try to hang in there just in case we start selling off again. And in the meantime, while we watch this, we're going to see if we could trade some soybeans as well. Although soybeans is already finished, it's in this trade here. Again, one of those things where you got to mind your business on crude oil. Can't trade 2 fast markets simultaneously unless you're really set up for it, and it's really difficult to do on a video. We've seen this in the past where I just can't flip around fast enough.
Order filled.
But crude oil did just finish. I just heard it. Crude oil came up and touched the stop. You can see the orange line. And that one finished at 103.72. So crude oil picked up on the second position. Another 45 cents. $450. So not bad, right? An $800 day, 80 cents in total for one trade using Renko and crude oil. All right, I'm going to stop this video. Let's see if I could jump in on another market here, and if so, I'll run the recorder. So look for that just in case I do record another trade. But we're done with crude oil today. A great way to start the week yet again. Thanks for joining me, everybody. This is TJ with the PTU Trend Jumper, and I'll see you next time.